right, is its size can vary as well. The doji size can vary. Just don't want you to get caught up on um, dealing with the doji being one day because it varies. Now, a doji followed by a previous doji means the market is also in indecision. So that's something that, but don't sleep on it. It could be a sideways market, as what we kind of seen here. Let's see if we can find. We seen some spinning tops when we were in this area right here, right? We seen what it's called. Let's get this back on auto, that way it can fit the area. Okay, see, right here we seen what it's called some spinning tops, but it looks like there's a doji, possible doji right there as well. You see that? There, do we all see that? Let's look. Can we see a doji? Let's blow it up. Remember, if you can blow this up, there's a way of looking at this here. That's the beauty about this software. It it helps your analogy. I mean, I feel like and when it comes to trading and doing technical analysis, you're like a doctor doing a surgery. You see that? Ah, what type of spinning top is that? Could it be a dragonfly? It is possible, and that's what we're going to talk about next. That's why I'm saying that there's really four different types of um, dojis. You may hear them by different names. You might even hear me say one in particular. I usually I pay attention to the doji called the high and low close, high close and low close dojis. Those are the ones. In other words, basically what I'm saying is I like to find my dojis at the top and I like to find them at the bottom. I don't look for dojis in the middle unless I was like we're in a 15-minute right now, but I like to look at them from the bottoms over here and I like to look for them at the top. And remember, a doji also doesn't necessarily have to be completely closed. That's important for you to know. A doji doesn't have to be completely closed. Um, let's see if we can find one. There we go. See, doji candlesticks. Now, what do you see? You see the color, right? But on some dojis, you don't see anything. You know, you, you just see here. You can just see where there was a battle to go up, and there was a battle to go down, and the real body in the end, it was just only that much movement in terms of how the market moved. It stayed stagnated. You can see it right here, but it's a extreme battle going on. Somebody's about to win. There's getting ready to be explosion, whether it's going up, whether it's going, whether it's going up, whether it's going down. That's what you have to know. But candles can give you that visual insight on, you know, you start to see it once you get that trained eye. And that's what you need to learn about candles. That's how simple it is. Very simple, especially for someone like us. We don't need things complicated. We're not mathematicians. We just need to have our tools. This is what I'm trying to teach you. So, candlesticks are a form of indicators, but they can be, remember, I always say they can be lagging, meaning that either the market has already started to be able to go in its position and you're too late. You have to know that. But they can be confirmed by way of confirmation by your other indicators that you're going to learn. So if you have, it's just like, I look at it like this. If you were, you just take a basketball guy and they have a slam dunk contest and somebody puts up a 10, somebody puts up a 9, somebody puts up a 7, or a guy who goes and he's a boxer and next thing you know you have these judges that give them all these points. That's what I like to look at. My indicators are how many of them are saying it's a go to go up with the market or go down. How many of my indicators are telling me that I need to get out right here or right here. These are all part of what you're going to learn, but you have to learn candles. If you don't learn it from me, learn it from someone else. So when we move in our next lessons, I take it that you would already understand candles. So if you don't learn it from me, learn it from someone else. Only thing I would suggest is that what I call and name these candles, you may have read and learned it as a different terminology, but listen, we are all talking about the same thing. It's the same thing. So don't get caught up in, oh, well, I was taught that candle looks like this and then, and all that. No. And this is why I like to, again, what we just showed you was dealing with the dojis coming in different sizes. And let's just jump back into the S&P, since that's the market that we're going to try to stay with. And we're going to go stay with also the daytime. So we're going to come over here to the day. Okay, so let's look at some dojis. There's a doji, right? Here's a doji right here, indication reversal. So I wanted to show you some multiple dojis, you know. And again, these dojis are very, very important, right? And again, I try to focus in high class dojis and low class dojis. And I'll show you examples in a minute after we go over looking at dojis. So now I talked about also, you know, other indicators that it's going to back up these dojis. But dojis, basically, it makes you want to just pay attention. Pay attention. Be ready. Be ready. The market may be going somewhere. So let's just continue to, is that a possible doji? It is a doji, but it's a type of doji. It's one of the four types. So that's why, again, we were talking about these dojis, but let's look at that doji, right? Notice the stem is a little bit longer, right? Look at this doji. We were talking about these dojis. They're all even, right? They're looking even, pretty even to me, but that doji is not even, but it is a doji. So that's what I'm trying to say. It's four types that you want to pay attention to, And we just talked about the regular doji, you know. And this particular doji that you're looking at on right here, it's called a long-legged doji, right? And it has upper and lower shadows. You notice it closes, it opens and closes in the middle of a trading day. See that? That's why these are so even, because it's opening up in the middle of a trading day. So the market was in decision. There was, again, that battle. Bulls are pulling it up. Bears are pulling it down. But they're breaking even. Doji. Simple. Simple. Don't make me think. And that's what I'm trying to get you to do. You don't have to overthink this. So with this, we can see there's a doji. We can see there's a doji. And then, this market, I can what you call, I'll just do a year to date. Year to date just simply means today is October all the way to January the 1st, 2021. So this year we can look at what is called doji, because when you start to chart, you're going to go back, at least I like to go back 2 years on my patterns, because then it tells me what happened in the morning when the market was during Black Friday, what happened when Christmas came around, the holidays, what happened during the time of Mother's Day and Father's Day, and you can see these patterns, and if they keep repeating year after year, you can say, oh, wait a minute, or what was going on, because you can click on. That's the beauty of these candles, is you can click on one of these candles and you can actually get information tracking back to that day that happened when you see a big drop. You know something may have happened in the markets, and maybe there was, like I said, oil issues. Maybe there were tech issues. Maybe the coronavirus has caused the market to go down. So those are things that will affect your trading. But again, the market still has to correct itself. So it's just like a spiral spring. Remember that it's slinky, the fundable, visible toy, and the slinky would just come down, and then no matter what, it would just conform its back to its body, or a spring on a car shock when you just try to pull it down, it pushes you up. That's how the market is. It's going to correct itself. So regardless if it's the coronavirus, if it's a new president, if it's oil issues, whatever it is, again, if companies are merging, the market will correct itself. And the market will tell you, candles and your technology of the market and patterns will tell you how and where to place your trades. Okay, so um, let's see. We're going to go into, excuse me. So our next particular one we're going to talk about is going to be called the, let's see. Let's see if we can find it right here. Okay, well, what we just talked about here is this is what we was just looking at. We were just looking at this one, and this is called the long-legged doji. That's what we've just been talking about. That's what we were looking at when we went to our charts. Long-legged dojis. Ah, you see this right here? You see that body is a little bit bigger than this picture? See that doji? And remember what we always say? Dojis don't always come exactly like this. This is a long-legged doji because of the shadows, this wick. See how long it is? See how long it is? That's what makes it long-legged, like just like they say a spider is a spider. But we have some spiders, what? They have long legs, and what they call them? Daddy long legs. See? So just look at it. It's a doji, but it just happened to be a long-legged, right? And sometimes the long-legged comes with a bigger body. So that's just something. But the thing is that the market, these are a little bit higher. So this one, again, that's what I love about this chart. We can zoom in. Look at that. That's somewhat of an even. This one, somewhat. And again, I just don't want you to get caught up, because the reason why you can get caught up in trying to look at, and again, when you start to trade and you start to use this chart, you're going to see that I thought that was a long-legged doji. I could have swore it was, but I was undecided, and because of that, the market moved in a way that, man, and then you're going to be like, now I see I can't get caught up on looking at a doji in one particular way or form. Okay,